Good morning, students. In this video, we will continue our discussion on financial inclusion. We have already discussed the meaning of financial inclusion, where we learned that financial inclusion is a process of ensuring access to financial services, timely and adequate credit where needed by vulnerable groups, such as weaker section or low income group. We also discussed that in a country like India, financial inclusion is a critical part of development process. Since independence, the combined effect of successive governments, regulatory institution, and civil society have increased in has helped in increasing the financial inclusion net in the country. Although there exist various problems, various challenges. Some of them are high cost, lack of robust technology, lack of awareness. Also, bank have faced with high operating costs in extending the financial services to remote areas. High maintenance cost of these accounts as well as small ticket size of transaction is also adding to the problem. We also discussed about the initiative where we learned about Jan Dhan Aadhaar Mobile Trinity, which is the combination of Aadhaar and PM Jan Dhan Yojana, and a surge in mobile communication have reshaped the way citizens access to the government services. By significantly changing the concept of individual entity, Aadhaar has not only brought about a secure and easily verifiable system, but also easy to obtain as well as to help in financial inclusion process. The government has launched many flagship schemes to promote financial inclusion and provide financial security to empower the poor and unbanked in the country. Then we discussed about expansion of financial services in rural and semi-urban area, where we learned about the role of RBI and NABARD, promotion of digital payment. The third was promotion of digital payments. In this, we learned about with the strengthening of UPI by NPCI, digital payment have made more secure compared to the past. The Aadhaar enabled payment system enables an Aadhaar enabled bank account to be used at any place and at any time using a micro ATM. We also learned about enhancing financial literacy. RBI has undertaken a project entitled Project Financial Literacy. The objective of the project is to disseminate information regarding the central bank and general banking concept to various target groups, including school and college going children, women, rural, urban, poor, defense personnel, and senior citizen. We also talk about pocket money. The pocket money is basically is security SEBI and National Institute of Security Market flagship program aim at increasing financial literacy among school students. The main objective of this program is to help students understand the value of money and importance of saving, investing in financial planning. So that's all. This is what we have covered in the previous video. In this video, we will talk about the success story of financial inclusion. So, how successful we are in financial inclusion? The first point is increase access to banks. According to the World Bank Global Financial Inclusion Database or Global Findex Report 2017, 80% Indian adults have a bank account against 53 estimated in 2014. Findex 2017 report also estimates that 77% Indian women have bank accounts against 43 in 2014. Then is multiplier effect. These initiatives have brought about major changes to increase the last mile connectivity of financial services to its people. By providing access to financial resources to underprivileged and marginalized section of society, financial inclusion has the potential to reduce poverty, create job among others. Then is enhancing active participation of citizenry. Earlier, private institutions did not engage with poor as a customer on a significant scale. This has now changed, and there have been an active participation of private player. The payment banks like Paytm, Airtel Bank, Jio Money, etc., as they have also realized that bringing the poor into financial net is beneficial to their business model as well. Integration of financial services. The coverage of GEM Trinity with the direct benefit transfer scheme has largely been successful. Due to this, there has been a significant improvement in terms of targeted and acute payments. It has also helped in weeding out duplication of entries and bringing out the reliance on cash mode of payments. Now let's talk about the associated challenges. First is non-universal access to bank accounts. The bank accounts are a gateway to all financial services, but according to a report by World Bank, about 190 million adults in India do not have a bank account, making India the world's second largest nation in terms of unbanked population after China. Another challenge is digital divide. The most common barrier to the adoption of digital technology, which may promote financial inclusion, are non-availability of suitable financial products, lack of skills among lack of skills among stakeholders to use digital services, infrastructural issues, low income consumer who are not able to afford technology required to access digital services. Next challenge is implement deficit. For instance, the Jan Dhan scheme has resulted in opening of many dormant accounts which never show actual banking transaction. All such activity incur cost on the institution and thus huge operative costs only prove to be detrimental to actual objective. And is to avoid their counterproductive outcomes, it is important that all stakeholders participate in such program with proper intent and not just for the sake of it. Then is informal and cash dominated economy. India is heavily dominated cash economy. This poses a challenge for digital payment adoption. Also, according to International Labour Organization, about 81% of employed people in India work in informal sector. The combination of huge informal sector along with high dependence on cash mode of transaction poses an in, impediment to digital financial inclusion. Then we have gender gap in financial inclusion. According to 2017, the Global Findex database, 83% of male above 15 years of age in India held account at financial institution in 2017 as compared to 77% in females. This attributed to social economic factor including the availability of mobile handset and internet data facility being high among men than women. Lack of credit penetration. One of the main constraint in providing credit to low income household and informal businesses is lack of information available. With formal creditors to determine their credit worthiness, this result in huge cost of credit. Due to this, in 2016, the number of loan account per 1000 adult was 154 in India. This is quite low when compared to similar placed economic like BRICS nations. So now let's talk about the steps taken by government to overcome these challenges. Reviving banking correspondent model, giving the infeasibility of locating branches in every nook and corner of the country, The bank correspondents are used to reach out to prospective clients. However, an educate compensation structure makes correspond banking unattractive. Thus, there is a need to create better monitoring initiative for banking correspondents as well as to provide them better training. Second is leveraging GEM Trinity. Technology should be used to improve the assessment of credit worthiness for household and informal businesses. With the adoption of appropriate technology, a new data sharing framework using Jandhan and Aadhaar platform to enable easier access to credit with adequate safeguard for maintaining data privacy. Then we have need for data protection regime. In addition to greater digitalization, there is also a need to strengthen cyber security and data protection regime in the country. Leveraging differentiated banks. Differentiated banks like payment banks and other finance banks can be leveraged to a scale up payment system in unreserved area. The last is promoting USSD for rural area. The payment through USSD channel should be promoted as they have an advantage over internet in that it can also cover a large proportion of non-smartphone users. In India, USSD can be particularly useful in rural area where small segments still do not have reliable access to the internet. So we can conclude that for the success of financial inclusion in India, there has to be a multidimensional approach through which existing digital platform, infrastructure, human resources, policy framework are strengthened and new technological innovations should be promoted. If adequate measures are taken to tide over the existing problem, financial inclusion have potential to amplify the benefit of economic growth to poor. So that's all for today. Thank you for watching.